because I am recording my own trading CL June contracts to June 2018. I just went into a long trade because of this. The downtrend, it broke above that downtrend. So you can see that I bought it right there. I got my stop set at 68.97. It's given myself 12 cents. I bought it at 69.103, well, 69.10 basically. I'm in the money now. You can see the $8 in the money. And my 4 requirements for a trade: the moving averages must be in my direction, which the 8 is above the 20, is above the 50, and there's the 200. The stochastics must be in my direction, they're going up. The trend lines are in my direction, and Fibonacci. Down to this pivot. So there, 61.8, hit the 61.8, and then moved upward. My stop needs to be moved up below that pivot. So now I have a 4-cent risk. You can use Fibonacci's to figure out where the halfway point is of a candlestick. So it came down to the 61.8 of that one bar, that blue line right there. And now moving upward. The only thing is it's far above the 8, and the 8 is far above the 20, which oftentimes means that we're at a peak, ready for a pullback. Here's the 60-minute chart showing that it hit a Bollinger Band. That's what that is, the Bollinger Band. And we're about ready to do a 1030 reversal as well. So now I'm going to move it up underneath that, so I will have a break-even, basically break-even stop. So if it doesn't keep moving up, this will be a free trade. And oftentimes this is where I'm tempted to get out of the trade because I got $100 in the trade. Really, I am going to move my stop up, because if it breaks that trend line, it most likely will come back down, probably to all the way to the 200, which is down to 68.91. So now I will have a 6-cent trade. That's $60. This is actually my second trade of the day. I'm up 240, and there we go. The extension on this, doing a Fibonacci extension, is up here at 45. So oftentimes people will put a sell target, and I just did, at 43, which is right below the extension. My stop up, so again, if it breaks below this trend line, I'm not going to want it anymore. So now I have guaranteed a 12-cent or $120. So originally it was a 12-cent risk, now it's 12-cent profit. The risk on this one was a little bit more than I normally do. I like to do a 10-cent risk, but I put my risk below the 200, because oftentimes it will come back down to the 200 and then bounce back up. We've been going up for quite a while, since 68.73, and that was my original trade. I should have stayed in that, and it bounced off the 200 and I got out. Now it's starting to break the trend line. Now we have a downtrend. There we stopped out. Now my profit is 226 for the day. Getting a late start at trading. Now I'm going to draw a trend line through the tops of those, and the pullback here could be all the way down to 61.8. It's been doing that to this, past the blue line. Could go to the, what we call the 76.4, or this shows, because I drew it opposite, 23.6. It hit the 8 and that stopped it. Now my stochastics are high. If this starts curling, pointing down, I might be looking for a short somewhere over here. I'm not there yet. And this would be considered the 1030 reversal right there. Through those. This is more of a risky trade now. I'm going to keep my stop tight. Originally it was going to be up here. That's my buy stop above this pivot. You can see where the pivot hits the V of the trend lines. And typically my target would only be to here. I got 14 cents. And my risk is 13 cents. I don't know why my risk is so high. I need to move that down. Now actually my risk is much lower because it's 19 to 23, which is a 4-cent risk. 10 is an algorithm number. Many times people trade at 10, 25, and 50. Those are algorithm numbers, so oftentimes you'll see a reversal right there. Stochastics are high, the MACD's high, about ready to cross. Could have the potential to move down the 61.8 of this move right here, which is 68.96. So with that in mind, that's why I didn't set a stop, or set a target at 69.04. Try to get a little bit more out of it. Now I will move my stop down. Now I have a break, well, a 2-cent trade right above that trend line. Now we're on the other side of the trend line. You can see that it did dip below the 10 algorithm number, but now we're on the other side of that trend line, so it's a possible reversal on back up. With that in mind, I'm just going to lower to get as much out of it as possible, down to 15, which is above the 8 right there on the 2-minute chart, which is at 14. It has a lot of resistance right here at the 20. But it did go through it. Now I'm going to move it down above the 10 to the 11, because 10 is another sign of resistance to go up. I said resistance to go down, but it's support going down. Well, 97, look, it hit it on the nose. Look at that. That's the 61.8. If I draw it the other way, it'll show 61.8. Draw from the, since we're going down, I should draw from top to bottom, and then 61.8, blue line, hits it on the nose of all my trend lines. The trend line actually changed slightly, and now it's starting to round upward. That was my original target I'm going to get rid of. Well, I am going to move my stop down to get a little bit more profit. If it crosses the trend line, I'll be out. Right now with a 10-cent, 11-cent profit. With our stochastics so high, there is a chance that it could continue to come down and test the 50, which is the red, and the 200, which is the orange or peach. As you can see, it did stop me out. I am out of this trade, which is fine. It popped above 10 at 11, but this might be just a short pullback, because again, this is a 1030 reversal, so that could be the sign of a new trend. If we're going up, I need to draw the Fibonacci going up. There we go. Alright, so now we're at a 38.2 pullback. If it could go up to the 50% pullback, which is 69.18. This is a pullback from this original move from 68.71 up to 69.38, pullback to hitting the 61.8 there, and on upward. Because the overall trend of the market on a 60-minute moving average, or 60-minute time frame, is, you can see the 8, the 50, the 200 are all moving upward. It didn't hit the peak here at 54, so we haven't tested the new high, or the old high at 54, or 56 it looks like. Some people like to count the bars. but the bars are different depending on the time frame. See, if we go to a 5-minute time frame, that's only 2 going down. And on a 5-minute time frame, it looks like this is a pullback right to the 8. And I like to look at the volume too. People like to call these indecision candles, and whichever way after the indecision is the way you want to trade. Might pull back down to the 20 moving average. If the 20 holds it, which it did not, or this could be continuation of the downtrend. So we have to wait and see. Now it's on the other side of the trend line, and I didn't take it. Could retest this because we have the moving averages going downward. We have a higher volume for the red. So I went ahead and took it. I have to set my stop above this pivot. 17. I got in at 4, so that's a 13-cent risk. Am I going to get a 13-cent reward? Right there would be a 13-cent reward. Right now I should be in profit. There we go. I'm in profit. There's my profit there, $8, not 8 cents. Every cent of a movement here is $1. And when trading oil contracts, I would draw a trend line through the tops and then move my risk down. Because if it broke this trend line, I probably won't want it anymore. So now my risk is 5 cents. I got the 8 moving down, almost crossing the 20. That's always a good sign when that happens. So what this would mean is an overall change in the market at the 1030 reversal, again back here. And if I draw a trend line through there, look, it came up almost hitting that down trend line, and look at that. Now I'm getting some good movement, and I'm going to make my trade slightly profitable, 2-cent profit. It is getting support at the 200 moving average. As you can see, it just barely went below it, and then I might get stopped out right now because I moved my stop down so much, which is fine. So I got 2 cents out of that, $20. I can get back in. Might come up to this overall, or this this outside trend line, which would be about 9. Because it broke the inside trend line. This one being the inside trend line. Now we'll see what it does after this trend line. And it seems to be holding that trend line. So we have lower lows. I'm still biased toward the downside right now, where before I was biased toward the upside. I could go ahead and try to take a trade right here, which I did. So I'm in at 69.06. Set my stop. Again, it'll be above that pivot, because if it goes above that pivot, I definitely don't want it. So that's a 10-cent risk. Since it tested that 200 moving average this time, chances are it will go through it. Alright, well, I came back. They had a fire alarm and gave us all clear, although, as you can hear from the background, the fire alarm is still going. And when I left, I went ahead and just got out of my position, break even, but again, I lost $4 in the trade because there's $2 commission each way on Interactive Brokers, and that's the brokerage firm I'm using. And I missed this trade here. As you can see, it went up again. I think that is to the 50%. Let me see. Yep, just about to the 50%. Didn't quite make it there, so it's a little weaker than that. And then came back down, would have been good short, or I could have just left. If I left my stop where I had it rather than getting out, I would have had a great trade here. Uh, what's that? 05 to 75. That'd be $300, 30 cents right there, because I got out right where I got in at 05, 06. Yeah. And now I'm just watching it go. But you can see how powerful the 1030 reversal time is. So it went up into 1030, went down, had some support from the 50 and from the 200, and once the 8 crossed the 220, which is the blue line, it now has crossed the 50 and now crossing the 200. On the 60-minute, this will come right down, or this is coming right down to the 50 moving average, the red line. Looks like it touched it right there. A lot of times people will take a trade right there, but it's risky, because if you look at this 60-minute chart, it could go all the way down to this 200 moving average, which is down to 67.45. That's a big drop, about 100 there. Heck, I could have gotten in here and still been okay, but it's, again, risky, because I would have had to give it all the way up to here as a stop if I wanted to use a stop, unless I did targets. So it broke the previous low right there. The previous low is 68.48. Broke it by 1 cent, 68.47. Here's an example of a scalp trade. I'll hit that, and I will get out as soon as it gets up to half of that bar. Nope, and it didn't quite make it. It should still make it. So half of that bar, 70 to 47. Is basically a little over 10 points, 12 points. So should be 57, 68, 57, which is right there. If I changed to a 1 minute, let's see what it actually did. It almost came up to that. Look at that. 56, and I set my target at 57. Now it still could do that, because it came down now to 43. There we go. That's a scalp trade. As drawing the trend line, it did break above the trend line just barely, and now it's on the other side of the trend. See it? So drawing a trend from the two tops, breaks above it, goes back down, and then hits the bottom side of the trend line, and then it should come up to probably above this line, possibly 75, more like 72, because the 8 will move down and they'll meet. So now we're on the uptrend, which I could get in this, which isn't advisable, because it probably will only go up to, like I said, just below the 75, maybe 74. See, the 8 is moving to it. The better play is to wait for it to pull back and sell again. Now we need to watch for a break in the trend line to sell on, which would be about right there. And I could set a stop order say at 61, then my risk would probably be to 76. I wouldn't set it at 75, because 75 is likely a reversal. And sometimes I'll do this. I'll set the stop on both sides of this, so I'm capturing, if the market does push up above 75, likely it will go to the next resistance, which would be the 200 at 87, but more likely it's going to crash below this uptrend line and move downward. If I do a Fibonacci from there to this pivot, see how far it came up. It hasn't come up to the 50%, which is 79. That's another form of resistance on an uptrend. Here it's crossed through this uptrend line, broke through a little bit, and this trend line can be removed because it wasn't accurate. I didn't wait for it the bar to finish. The next level of resistance or support for the downward trend is way down here at 67.50, which is the 200 moving average on the larger time frame. So we just wait and see. It's not a lot of volume right now. Normally at 11:15 there's a lot of volume because other markets are closing, and it tends to be a reversal time, which means it was going up until 11:15, so that would tend to be a reversal downward. So far it really hasn't happened. The only thing that does help point it up is the stochastics, and you got the MACD starting to curl upward. We are on the other side of this trend line, so this should be, I'm going to have to move this up because now look at our trend line. Our trend line means that it could come up to 75 and then go back down. Because once it crosses a trend line, oftentimes the trend line then acts as support or resistance. In this case, resistance against going up further. Now, since that bar is done, I could move it up to 65. So if it goes to 65, chances are it will keep going down. So it didn't come quite down to that trend line, so it's actually curling upward. So now we have an outside trend line there, and I will draw an inside trend line. Which is a bullish pattern if the trend lines are getting steeper. However, our Fibonacci lines, it's coming right up to the 50, which is 68.78. So now that I moved my other trend line or other line up, I'm still not quite bullish, so I'm going to move my stop up. I'm in this trade, I'm $98 up, which is a pleasant surprise because it broke through that trend line very quickly. So here it shows that 11:10 is a reversal. There was my original trend line, then it broke through a little bit, but it didn't break it with conviction. So now there's an inside trend line, very steep. I'm not going to use it for setting my stop, but I am going to use the 200 because chances are if it comes back down to the 200 and breaks it, I don't want the trade anymore. Now I'm in at 81, my stop is 91, it's a $100 trade. I might not even want to give it that much because now it broke through a 6,900, which is a support and resistance in itself, algorithm number. So if it breaks below that, I probably don't want the trade, which I'm about ready to get stopped out. But there, not a bad trade. It was from where did I get in? 81 to 98 actually. That's a 17-cent or $170 trade. I'm up 562 for the day, trading one contract. So see, it did break through the trend line. Now I'm not sure how far it can fall. It looks like it could just hang out here in no man's land anyway. So I'm going to say goodbye. Hope you learned something.